Good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, May the 6th, 2025, recording this about 7:30 in the morning. Okay, so not a huge amount of news overnight, but what is sort of interesting and just actually got my attention over the last couple of hours is that in Germany, the sort of election for the new, or the confirmation for the new Chancellor Merz, he actually didn't win the vote. So you need 316 votes. He only got 310. Okay, there's internal politics going on amongst the coalition. But what's interesting from a market perspective is that does this signal that there's going to be, some kind of problems between or sort of fractious relationship between his Christian Democrats and the right wing and his coalition with the left, the sort of more centrist left wing kind of parties, and really from a market perspective, what's important there is this idea that his coalition will very soon start spending a lot of money on infrastructure and defense. You will remember that a couple of months ago when he sort of won the national election, it was on a platform of a lot of infrastructure spending and defense spending. And that was partly, behind a bit of the boom in the European equity market and this idea that the European economy would actually keep on chugging along and maybe even expand. But what we're seeing here is on the German futures here on the DAX index, you see it's got to a high here, now actually kind of being rejected up there. It's subsequently come back in the last half hour or so. But basically on that news, it's sold off. If we also look at the broader sort of European Euro Stocks 50, that also had a bit of a down push on that news. What's interesting as well, just in terms of the Bund, because you remember what's been going on with the Bund is that when that infrastructure and defense spending was announced, which is around about here, about the beginning of March, you see there was a huge fall in the Bund. Subsequent to that, of course, we had some risk off, some concerns about the US bonds, tariffs, etc., etc. And basically, the Bund has climbed all the way back up. But what you can see here is that it's interesting market reaction because we saw the German and the European equities come off on that news about the failure of Merz to get, to be formally confirmed as Chancellor. But in theory, if that's the case, does it mean that potentially any further infrastructure spending will not be happening or be watered down, or any further spending on defense will not be happening or will be diluted? This is really the question. If that's the case, one could argue a couple of things. One could argue that in terms of the bunds, there'll be a need for less issuance. They wouldn't have to issue as much. So that could be a positive for the Bund. On the other hand, you could say that there's sort of uncertainty in the political leadership, which is not good. And that could be destabilizing, especially for the euro. So if we look here, just finding my euros. Yeah, so again, the euro, just let's have a look at the reaction here of the euro to that news here. If I can find the euro, here we are. So yeah, you can see the euro not doing a huge amount at this point because there's a lot of other issues in play. But just let's keep an eye on that, because if Merz, there could be another election within the parliament within up to 14 days. So it's quite probable that he will be confirmed. But it's just interesting to see just the internal dynamics of that, especially from a market perspective. And you see some of these sort of issues starting to sort of upset Europe here. We just had a headline coming across here on the Bloomberg terminal just a few minutes ago. Which came across at 7:23, so just a couple of minutes ago. EU targets $100 billion worth of US goods with tariffs if talks fail. So the point is that the tariff situation has not gone away. And I'm just looking over there to my left there. I've got the charts up and whatnot, and it looks like the ES, like in the US, is sort of falling a little bit as well. So the point is that there's still tariff problems. And yesterday we had one of the cabinet members in Trump's party essentially saying that a deal with Canada, for example, might be possible, but it was going to be very complex and it would take several weeks. And so the point is that this whole idea of a quick resolution and that deals are going to happen and that everyone's going to go away very happy, I don't personally think it's true. I think it's going to be analogous to something like the Ukraine-Russia war, where it's very complex and negotiations will grind on for weeks and weeks and weeks, maybe into months. Now, talking about some of the tariff stuff, I just want to give a pullback. Came up with a couple of charts yesterday. I was just looking at yesterday afternoon. afternoon. And it's just kind of interesting to see just the context of this in terms of the overall direction of the US economy. And if you look at the highest, this is from a Goldman Sachs, a research note. It's kind of just interesting here. Now, keep in mind that Trump, back in his first sort of first period in power, he actually did introduce some extra tariffs on China, and it shows that little bump here. But if you look here, the effective US tariff rate going all the way back for 100 years, you can see where we are. We're at very, very low levels here. So we're at about, I think, average of about 2.5 or 3% here. And even if Trump pulls back and there are sort of deals signed, Trump is still talking about a minimum of 10% universal, a minimum of 10%. So even if the situation, quote unquote, improves with China or Europe or Canada or whoever, the reality is that this historically low level, which we've basically had for about 20 or 25 years, is going to creep up. Now, whether it goes up to 5 or 10 or 15 or 18%, Goldman thinks the average could go up to about 18%. This is it's not going to be great news in terms of, it's going to be a little bit inflationary at the beginning, and it's going to put a lot of American companies under pressure, and it's basically also going to suck money from the U.S. economy. It's going to be sort of a liquidity event in the sense that it's like a form of tax. And the other interesting thing which I saw here, actually maybe is that a bit too big. Let me see if that's a bit too big. Yeah. So you can see here actually just the amount of customs and excise tax, so duties collected going back basically about 20 years or so. And what you can see is up to about 2018, that was, in this band here. And then suddenly you see that once Trump started putting his initial tariffs back in 2019 on the Chinese, you see that jumped. But if you start looking at what's about to happen here, you can see that this level we might start going into a whole new band. Way up here somewhere. It could grow a lot more. And what's interesting about that is that keep in mind that the tariffs, Trump keeps on telling us that the tariffs will be paid by overseas companies, but the reality is a lot of that will be borne by the US consumer, by US companies. They'll have less margin. So maybe at the beginning, they'll accept a little less margin. But at a certain point, if you accept a little less margin, at a certain point, maybe they're going to start thinking about sort of firing people and whatnot. So let's just keep an eye on these sort of import duties. And the thing here is that as these numbers go up, that, as I say, will start to take money or free cash, so to speak, from the US economy and from consumers and companies' pockets. So just interesting to keep an eye of that. Now, talking about Canada and sort of Trump and deals, we have Prime Minister Carney of Canada who's meeting with Trump today at 11:45. Again, I think the world's going to be looking at that. Markets will be looking at that just to see, just what the fallout is going to be. We know that Carney is fairly sort of no nonsense, quite a serious person, quite a respected person. We also know that the US dollar, since the initial tariff fear, has come down, significantly, 5 or 6% here. Actually, let's really have a look and see exactly how much it is. Yeah, it's come down about 5.5, 6%. Compared to the Canadian dollar, and we're now just at a pretty key sort of level there of about 138. So let's see, not only for the specifics of if there's some sort of deal announced or friendly progress. Trump no doubt will tweet something and say, had a great meeting with Mark Carney. What's going to be more interesting, I think, is Mark Carney of Canada's reaction to, because he's probably going to be the adult in the room in a certain sense, just to get a sense of whether a deal, potentially could happen, what the time frame is, what are some of the complexities, the obstacles, and also just to see the market reaction. If the market, likes that, and we might get a sort of a pop in the US equities and maybe also in the Canadian dollar, interesting to look at. In terms of other stuff going on, I'm not going to go into the Taiwan situation. We know that the Taiwanese dollar has come off, has strengthened a lot over the last 3 or 4 trading sessions. And there's some sort of talk, without going into all the details, that a lot of the Asian countries, especially some of their sort of life insurers, they have large sort of trade surpluses with the US. They're holding a lot of US denominated debt, especially, for example, US treasuries. They have large sort of investments in the US. But of course, with the US dollar losing a lot of its value, a lot of these life life insurance companies are basically getting less premium in terms of local, for example, Taiwanese local currency terms, and also starting to worry about some of their sort of their assets, their US denominated assets and investments in the US. And there's more hedging activity going on, and a lot more money is being converted into, for example, Taiwanese dollars. So the point of that, apart from Taiwan, is also to start thinking that, is there's sort of a lot of rumors going around that behind the scenes, the US is saying to a lot of countries, hey, if you, weaken your local currency substantially, that would be, beneficial for the US and the US trade situation. So could we expect a little more, here, is this a sort of a bear flag in the dollar index here? It's at the key level here of about 100 or so. But, I think there's potentially more downside if we continue to see that. And just by the way, talking about tariffs in the US dollar, if the US dollar does continue to weaken significantly, it's not a huge input, but at the end of the day, that would be, add another small sort of inflationary input to the US domestic situation. That would be inflationary. So a little bit of what I'm drinking this morning, Earl Grey. All right, so let's keep an eye on what happens with Carney and Trump at 11:45. Other interesting situation for me, at least, is just what's happening in oil. And we know that oil sort of gapped down a little bit on the whole OPEC plus increasing their sort of production. But what really I was trying to sort of figure out here was whether, this sort of double bottom would hold. That bounced. And we can see here that so far has had quite a nice bounce back. And what is interesting, if you sort of zoom in, let's put it on a 4-hour chart here, is just to see this gap. So this is the Sunday night gap we had on the OPEC, and you can see that's been closed on this 4-hour chart fairly easily, actually. Quite strong sort of price action here. Just on those European headlines we got 30, 40 minutes ago about potential new European tariffs on US imports into Europe, oil's come off a little bit. So it's going to be interesting to see here whether this was actually a case of sell the rumor and buy the news, and whether that was sort of priced in or not. And let's see whether this level here of about 55.15 on the front contract in WTI actually sort of holds. Now, just from a technical perspective here, which I do like to look at, if we look at what the bears need to do, or the bulls for that matter as well, we can see that just on a short-term fib here, we haven't even got back to a 38% retracement. So the bulls still have quite a lot of work to do. If we actually put that fib on a slightly shorter term, just this down impulse here, you see that we're at the 38% fib retrace. So quite a key level here. The bulls, if they want to keep this going, they're really going to have to push back to this 50% and the 68% fib retracement. So I'd say we can't really, just from like on the 4-hour perspective, talk about this being a super bullish price action until I would say we breach, let's say, about $61 or so. I think, if we get up to $61, you could start to think that, maybe this wants to retest these recent highs here. And just in terms of oil, what we do have today, we have the EIA sort of agency, which is coming out with their short-term energy outlook, which is always kind of an interesting monthly report. So that's going to be interesting just to see the market reaction, but also to see the details, whether the EIA believes that the physical demand for oil is actually sort of rising, or whether it's collapsing, and that could have some kind of input on where oil goes today as well. Other thing as well, I just want to show you just a little bit some of the bigger picture here, and it does seem that the Saudis are trying to sort of put some less shale production, some of the shale producers out of business, maybe trying to sort of quote unquote punish the members within OPEC Plus who've been overproducing. So the Saudis maybe are saying, hey, we'll keep oil prices lower, we'll pump up production. That will have a side effect of keeping the Trump administration happy for geopolitical or defense contracts reasons. But in the meantime, that will also just sort of be a bit of a slap of the wrist for countries like United Arab Emirates, Kazakhstan, and Iraq, who are overproducing, and just to sort of calm them down a little. But also it might have the effect of putting some of the US producers of crude oil under pressure. And I thought it was just interesting here just to sort of have a look at the bigger picture here. You can see the US crude oil production. So this is the year-over-year change. And what we can see is that, basically over the last year or two, you can see that it's sort of plateaued. and in terms of shale and the US total, they're both sort of going down. And is that indication now that, they've sort of plateaued? Keep in mind that shale production is about 3/4 of US output. So the point is maybe that what the Saudis are trying to do here is to say, hey, we in Saudi Arabia will take a little bit of price pain for a few months, and we'll possibly try and cause less production in the US, and maybe even cause some companies to shut in production, maybe cause some bankruptcies. Who knows? And just in terms of that, interesting to see in terms of what's going on here. So you look at the oil break evens here. This is quite interesting for the different parts of the US. For example, like the shale producers, non-shale. But if we basically look at all of it, I mean, obviously it's a bit of a difference here. But if we look at, let's say, the shale and the average, sort of the average, you're talking about $40 to $45 to break even for existing wells. So that's wells which already exist because all of the infrastructure is in place and they can just keep on pumping. So the point is the existing wells will still be sort of profitable down to, let's call it $50, $45, something like that. And again, it depends. For example, in the Eagle Ford part of the US, it can go even down to about $30. So that's interesting. But it's a very different story, though, if you want to drill a new well, because obviously if you want to drill a new well, that there's a lot of infrastructure pricing and whatnot. And you can suddenly see here that the break even for the new production, new wells, is not in the mid 40s, but it's actually in the mid 60s. You can see here it goes even up to like $70 to down about $65. So what's kind of interesting here is that maybe the Saudis are looking at this and saying, hey, at a minimum, maybe the existing wells, which are actually less and less efficient, will continue to pump, but the Americans will think twice about investing in drilling new wells, and ultimately that's going to push down their production. Now, of course, what's interesting from a medium-term situation is that the Saudis could then potentially take more of market share, and also in the medium term, let's say, for example, over the next 3 or 6 months, oil production does fall off in the US. Of course, that could actually then put a floor under the oil price, and it could start sort of pushing up as the market anticipates that there will actually be less production, which would be a positive for the prices. So quite a few interesting dynamics going on. I mean, also we had the news yesterday that the Israelis seem to want to occupy Gaza and to expand their military operations in Gaza. That's not directly going to affect oil, but it is creating, again, a little more tension in the whole Middle East, negotiations between Iran and Saudi Arabia and who knows who. So maybe that's giving a little bit of a premium to oil this morning. Other interesting things as well is just to look at the gold market. So you can see here that, I'll just bring up the chart here, the gold actually has ripped higher again. Again, we continue to have a weak US dollar, but just kind of interesting. And, I was talking about the demand in China. And is this simply the fact that the Chinese retail buyer and institutional buyer came back? You'll remember that China was on holiday for Labor Day. They were off for about, I think it was about 4 or 5 days. The markets were closed. But look at this, just on this sort of shorter term fib here, on the sort of around about the 50% level, very powerful uptrends here. Again, I mean, some people, like I saw a research note, I think it was from Goldman Sachs, calling for $4,000, maybe. And it's just interesting to also look and see what's driving this. Just to put this into context, again, I have just a sort of a graphic on this, which I was looking at this morning. So if you actually look and see what's been driving up the gold price, you can see here that what's interesting, if you look here, is actually sort of more like this, let's call it the financial or the paper situation. And you can see here that the non-commercial speculators, basically the speculators, you can see that they're actually have been selling gold. That's interesting. So on the CFTC, so the Commitment of Traders report for futures, they've actually been selling gold. Okay, so why hasn't the gold price, sort of gone down substantially? But what we can see is that the ETF holdings, actually, they've started to pick up slowly. A lot of these are US-based. These are US-based ones. So you see, they were actually selling, but they've actually started to pick up a little bit over the last 3 or 4 months. So we're getting a little bit more retail interest from the US and a little less on the futures, the speculative interest. So maybe they're canceling each other out. But what we are seeing is that the Chinese ETFs, the Chinese retail is absolutely going crazy, and there's a huge amount of money going in there. We can also see central banks, which is this green section here, and you can see that the central banks have always bought gold, but especially since the Russian assets were frozen by the US after the invasion of Ukraine, the central banks have been buying a lot more gold. So that's this green chunk here, which is a lot more, and you can see the ETFs is relatively stable. But and look at the gold price. So it's really a lot of it's the central banks, and it also seems this is the freezing of Russian bank assets. So you see here that started to really ramp up. So that seems as though it's still there. So if we assume that ETF demand in the US is slowly going up, ETF demand in China from retail is huge and growing. Also, central bank buying is strong. And then the other issue as well is that, for example, in China, the Chinese authorities have basically allowed and encouraged their insurance companies there to put a greater proportion of their assets into gold holdings. So all that to say that and plus, of course, we have some geopolitical tension, and we also have potential debasement of the US dollar, and we continue to have, potentially a little bit of sticky inflation. So I suppose it's no coincidence here that gold's going up. The real question is, what's the entry point? Do you wait? Personally, I'll put my hand up and be honest here. I was looking for this price here about 3175. Thought that was kind of interesting. So missed that little run up there. It's interesting. I mean, if you look at it for sort of Fibonacci measured move, using some classical sort of technical analysis here, you could say that at least a retest of the highs 3,500 is possible, and maybe even a profit target here, or a sort of a target at least of, in the mid 36, 3,700, something like that is not to sneeze at. And then again, if we just look at, let's say, for example, a bit more on a sort of a trend-based kind of situation here, hold on, where's my EMAs? You can see that, the EMAs, the trend is very much from a longer term trend following is still very much in play here. You see all of the EMAs, the 20, 50, 100, 200, all happily moving upwards. So that looks as though that trend at the moment, any sort of CTA or momentum kind of strategies will probably still be holding their position. Okay, I'll leave it there, guys. What we also have today, we have a 10-year auction. The 2-year auction yesterday, the 3-year auction yesterday for the treasuries went quite well. It was quite strong. Let's see how the 10-year goes today. And that'll just be interesting because, as I say, a lot of people are talking about potential, Asian real money players trying to sort of sell some of their, longer duration bonds. We shall see. Okay, I'll leave it there. We have the FOMC tomorrow at 2 p.m. I will talk about that obviously in more detail probably tomorrow morning. Okay, thank you. Have a great day and hope that was useful. Goodbye.